Welcome, and I want to thank you for coming. I spent months preparing for the seminar, and now's the fun part, presenting it to you. So I want to thank you for taking the time and effort, and also congratulate you for investing the time and financial resources for realizing the value of education. What we're going to be looking at today is obviously Candlestick Charting Essentials and Beyond. And for those not familiar with my background, I was the first to reveal candlestick charts to the Western world in 1989 BC. My first book came out, and BC means before candlesticks, for those not familiar with that. I'm the author of 3 books on candlesticks. I call them candles. My website is candlecharts.com, and they've sold over 100,000 copies. But as good as my books are, all my newest resources, all my nuances with candles are really in seminars such as this one. And this is to give you a sense of, the work I've done. This is part of my research area. I've spent hundreds of thousands of dollars in research costs to uncover what I call these secrets of the Orient. And every pattern and every strategy that I'll be revealing today and my other educational resources have been corroborated by at least 2 original Japanese sources. I've had dozens of books translated. I've spoken to high-profile Japanese traders in Japan. My original research in the 1980s, we would fax back and forth. This was pre-email. And so I would send an email, and the Japanese traders who worked at the head financial firms would get together and take a month or so to get back to me because the Japanese do a lot of things by committee. And so, in fact, also, I got really lucky when I was working at Merrill Lynch. One of the brokers there in the bond area, his grandfather and his father, and he was using candlesticks. So everything I'll be talking about today has been corroborated by at least 2 or 3 Japanese sources. And the reason I mention that is because I see a lot of other information about candlesticks out there, and a lot of it, I have no idea where these people got these patterns from. Okay, what I've done with my research is really tapped into generations of use. Okay, candlesticks have a pedigree. Why not take advantage of them? Okay, plus my decades of use with the candlesticks. Also, and this is very dangerous, I see a lot of misuse with candlesticks. And throughout the session, over the next couple of days, I'm going to show you some of these misuses because I see, as I mentioned, a lot of dangerous. People know enough about candles to be dangerous. And what we're going to do in these sessions is, because it's called Essentials and Beyond, is kind of start with the basics and then take you to an intermediate level. What we're going to be doing is going over these nuances and then taking you to the next level. Now, over here with this research, one of my seminar students made a nice comment. Okay, everyone that teaches candlesticks quotes the master. Why not go to the master? Okay? And I try not to have comments like this affect me, but sometimes I can't help it. Okay, how many of you feel like this? Right place, right time, 2 exits back. How many of you feel this way, right? Yeah, let's go. Okay. At the end of the sessions, by the end of tomorrow, you won't feel this way. Okay. There's a proverb, there's a Japanese proverb, and the goal, for those who've been to my other seminars, and Paul had mentioned something interesting. I get this feedback a lot. I know many of you have been to my other seminars, but every time you get to a seminar, even if it's kind of the same information, I have a new nuance, and you pick up something new. And the reason I mention that, for those who've been in my seminars, you know how I try to make it not only informative, but entertaining. Okay, you're going to be here for a long time. And I do a lot of seminars for institutional traders, so at the end of the day, the traders are really tired. So I have to make it energetic, entertaining. I'll have Japanese proverbs, we'll have cartoons, so-called humor. So, and I came across an interesting Japanese proverb, speaking of proverbs and humor, and it said, to boil tea with one's navel. I said to myself, what did that mean? And I realized what that meant, that if the joke was so funny, you'd be laughing so hard that you could boil tea with your belly button. Isn't that great? We're going to be, have some entertainment and Japanese proverbs. And the reason I mention that is because there's a Japanese proverb that says a prudent man has more than one string to his bow. And that reminds me of a story about the Apaches in the Old West, and they attacked a cavalry unit. And the cavalry unit happened to have a paymaster safe. So the Indians took the safe and tried to open it. Okay, they tried to whacked it with stones. They shot it with guns. They tried dynamiting it. And they even threw it off a cliff, and nothing worked. And in total frustration, they gave up. So they had to leave that valuable gold behind. The Army paymaster came and with the correct combination opened the safe. And as we move down the path of knowledge, as we start moving down the path of knowledge over the next couple of days, I'm going to give you the combination to help unlock these previously hidden trading strategies, these golden trading tactics, to help you improve profits and decrease risk. Now, we're going to be going through a lot of markets over the next couple of days. Keep in mind, all these techniques work in all markets and all time frames. That's one of the beauty of candlesticks. Now, it's interesting how I mentioned before my website is candlecharts.com, and I get these spam emails, and they give me, I got one that said camel charts, C-A-M-E-L, and then I got one that was interesting. It said candid charts. And I thought, how appropriate, because that's what candlestick charts do. There's no better and faster way to accurately read the market psychology than using candlestick charts or candid charts. Okay, it lets you see what's going on in the market. And what this means to you is being able to recognize potential turns before the market makes its move. Now, the Japanese have another proverb. It says, the fool in a hurry eats his food, drinks his tea with chopsticks. Okay? So we're going to go step by step. And just to give you a sense of how many people are making money, thousands of people use the internet to trade, and candles are probably one of the most popular forms of charting now. But as I mentioned before, most people using candles are using them incorrectly, which is good for you. Okay? Let them be those who are giving you the money, right? From the Wall Street Journal, probably the most popular financial paper in the U.S. Okay, Japan's Candlesticks Lights Trader's Path. Okay, whether you day trade or hold positions, candlesticks are a must. And the second one makes reference to the idea I said before: all time frames and all markets can be candlesticks charts can be used in those. And we're going to have intraday charts. We're going to have daily charts, even some weekly charts. And from Barron's, Candlesticks, a new light in technical analysis. And interestingly, candles was so popular. I did a seminar a few years ago for Morgan Stanley, I believe, and it was for the high net worth brokers. And I said, what am I doing here? And it was fascinating, and this was probably about 5 years ago. They said so many of their clients are trading with candlesticks that the high net worth broker had better at least know the essentials of candles so they could speak to their clients. Okay, that's pretty interesting. So candles are very, very popular. Again, the goal here is to make sure you're using them correctly and most powerfully. Japanese proverb, without oars you cannot cross in a boat. Okay, what we're going to be doing now is giving you the oars. I know many of you are familiar with drawing the candlesticks lines, but as discussed in our syllabus, we're going to start with the basics. And the candlestick line, very simple to draw, but extremely powerful in diagnosis. So the candlestick line is made of two components. There's a rectangular portion called the real body, and the real body is simply the relationship between the open and the close. If the close is higher than the open, we have an empty or white real body. And it doesn't matter the time frame, 5 minute, 1 minute, weekly, daily. If the close is under the open, we have a black real body. Okay, so the Japanese place a lot of emphasis between the opening and the closing. The lines above and below the real body are called the shadows. Okay, so the top of the upper shadow is the high of the session, and the bottom of the lower shadow is the low of the session. And although this has the same data as the bar chart, what we learn with what we use the candles is it gives us the psychology of the market. Okay? And here's a quote from one of the books I had translated. Western versus candles, American charts tend to take single bars that have little meaning by themselves and combine them into groups and plot. It should be plot pattern analysis or trend analysis, but Japanese analysis is on the more micro scale. And this is the important part. and the psychological analysis of the investor, I would add the word or trader, becomes an important factor. And here is the secret why candles are so effective. Okay, candles quantify what traders are thinking. It's as simple as that. And let me show you an example. Okay, here is actually a 1-minute chart to show you how a daily candlestick line is drawn. So what we've done is we've taken the open of the session, okay, which is over here, the green line, and we've taken the close of the session, so this is one day a session here, so over here. Okay, so we have a small white real body because the close is higher than the open. The market, what happened is the market got down to here, that's the bottom of the lower shadow. We had a little spike here. So this is the close here. This was the high of the session. So the market closed near the high of the session. Now, although this wasn't a tall white real body, think of what the candle line showed us. I know many of you recognize this as a hammer, which we'll look at a little bit later. But what did that candlestick line tell us about the psychology of the market? What happened when the market got to the lows? Did it hold down there? No. It bounced back. And it's all visually displayed in the candlestick line. And this is one of the secrets, again, to using candles. It relays the psychology of the market. And I'm going to be going over some basic psychological underpinnings of each of the candlestick signals. There's a little bit more advanced stuff we won't have time to get into today. But I'm going to go through things like this, understanding that when you have a long lower shadow, the market's rejecting all levels. The bulls are getting a little bit more confident now, right? Think about what's going on. What do you think the bears are thinking? A little bit more nervous? Okay, all in one candlestick line. Isn't that amazing? And what the candlesticks do is relay the psychology of the market. Okay, you know the Japanese proverb, rivers and mountains are more easily changed than man's nature. Right? We all agree with that? How many times an ounce of emotion has been worth a pound of facts? And the best way to gauge emotions in the marketplace is with candlestick charts. I had this cartoon made up. Speaking of psychology, in the market today, anxiety was down 2.5 points, euphoria was up 3 points, stress was off a half a point. And as I mentioned, throughout the next couple of days, we're going to emphasize the psychology of the candlestick signals. So, there's a wonderful comment, speaking of psychology, by Bernard Baruch. What's important are not the events themselves, but the market's reaction to the news. So, just to show you an interesting slide, this was back with the Bear Stearns collapse, and the market had a rally after that. But this was really interesting how we look at the psychology of the market to understand what's going on in the market. So that was bearish news, obviously, the Bear Stearns collapse. We're going to be looking at these patterns later on, the bullish engulfing patterns. The market pulled under the support area of the bullish engulfing patterns, but what happened by the end of the session? If the market is not going to go down in good news and holding a support area set by candlestick signals, if it's not going down on good news, what's going to happen on, if it's not going to go down on bad news, what's going to happen on good news? Right? So it's not the news itself, it's the market's reaction to the news. Okay, these are some trading challenges I think you all have. Entering trades too late, okay, everybody? Knowing when to exit, and you may not have all these, but these are just very common ones. Preserving trading capital. Quickly recognizing the candlestick signals. And that's a common misuse. People think candles are complicated. I'm going to show you examples where they're actually, and why candles are very easy to use once you know how to use them correctly. Paralysis by analysis. Right? Yeah. Okay. Too much information. Correctly using candlesticks. When to pull the trigger if you see a candlestick signal. When to stand aside. And this is one of the aspects we're going to be looking at tomorrow when we discuss trade management. Okay, you have a candlestick signal, and we're going to discuss the essentials of candles today. But what do you do with it? Do you buy, do you sell, do you stand aside? And that's where trade management comes in. We're going to be focusing on that tomorrow. And a lack of confidence pulling the trigger. And our goal here is to ultimately have you become a much more confident trader. So The goal is having you become a confident trader, and by doing that, overcome your trading challenges. And how do we do that? Okay, with the light of the candles. And especially for those new to candles, or even for those who are familiar with candles, there are so many powerful aspects to candles that many of you may not be aware of. So let me go through some of these quickly. And we're going to look at each one of these. Candles, as I mentioned before, be careful, a lot of the literature out there. They say candles are easy to understand, are very complicated. It's not true. Candles are very easy to understand. Candles shine at giving us potential reversals. This is the true power of candles, that we're able to spot potential reversal signals before the market makes its move. Safety first trading, preserving trading capital. East and west. Because the candlestick line is made with the same data, open, high, low, and close. Okay, and by the way, the Japanese used to use bar charts over 100 years ago. Okay, they shifted over to candles, probably, from my research, probably around the 1870s when the Japanese stock market began trading. So we're actually, up until my work, we were actually using a more ancient form of charting. The Japanese knew about candles well before, actually well before we were even using bar charts. And what we're going to be looking at as one of the sessions tomorrow is this power, this synergy, and this is a really, really important concept of combining east and west. Okay, that's one of the most common misuses of candles. People will trade based on a candle signal by itself, and that's one of the best ways to get burnt with candles. Okay, I see Barbara shaking her head, yes. Okay, as I alluded to before, they work in all markets and all time frames. Okay, and it's a great way, once you become comfortable with candles, and you definitely will be by the end of the session, to accelerate your analysis. I do a lot of work with institutional traders. So, for example, one of the on the NASDAQ side, they may be looking at 40 or 50 markets. And these are not the big name markets, because those, the market makers on the NASDAQ side, well, you know, if they have the big names, they'll be looking at 3 or 4, you know, but if they have, 40 or 50, they're little smaller names. And what they'll do is scan through the markets and see these candlestick signals, and then they'll add their own analysis to it. Early entries. This is the beauty, and this is the major asset of the candles. Okay, from James, the candles allow accurate, precise, earlier entries than anything else I'm aware of, and make apparently hard plays pretty easy. And I love this expression. It's almost like continuously ringing the cash register. I should have a thing there. Past performance is no guarantee of future thing. And safety first trading. Okay, beside, and probably just as important as being able to make money with candles, or any trading technique you use, is helping to avoid losing money. Okay, and Brian says, I can honestly attribute over $5,000 in combination of losses prevented and profits made. I'm just going to skim this, and all I ever did was lose more and more money on bad trades, before the use of the candle signals. So we're going to be focusing on not only using candles to give you those early reversal signals, but how to stay out of bad trades. Many of us are familiar with Warren Buffett's 2 rules of money management. Okay, right? Rule 1, don't lose money. What's rule 2? Okay, don't forget rule 1. Exactly. So we're not going to forget rule 1 or 2. The goal is, at the end of the day, it's not only how much you made, but how much you didn't lose, because it's all added together. Agree with that, right? Yeah. Okay. Now, I had mentioned before, candles use the same information as a bar chart, but candle charts give you so much more. So I had this cartoon made up. Bar charts are us, and candlestick charts are us. So you're getting the same information as bar charts, but with the candlestick charts, you're getting an extra visual dimension of analysis that really is going to let you accelerate, as I mentioned before, your analytical process, and really let you jump ahead of your competition. Now, how many here trade options? Wow, okay. What I'm going to do at the session is I'm going to make some references to options. By the time this DVD is done, of this seminar, I'm going to have a specialized DVD on candles and options. And the reason I mention about options is because many of our traders who use candles are using options. So Bill mentioned, and these are all options he traded on Google and CME and RIM, a profit of over $20,000 last week and about $4,000 so far this week. But he trades with options. Okay? Candles are great for giving us potential timing. Okay, so to set up a potential option trade. Then you have to shift over to option strategies. Again, I'm not going to be going through that in this session here. You have to look at volatility and time value and all that. But there's a lot of cool things you can do if you're familiar with options with candles. So if I talk about, for example, a candlestick signal, a bearish candlestick signal, and you could sell here, you could shift over to buy put mode, or you might want to sell some, you covered call, you may have a stock, you may want to sell a covered call. So there's lots of cool things you could do with the options. But again, just to give you a sense of the universality of candlesticks. Forex. Okay, there are some nuances with the Forex market and candles, and I'm going to briefly touch on some of those today. Again, I have a whole separate educational resource, and some of you may have it, my Forex, Profiting in Forex DVD workshop, whole separate Forex DVD. And I'm going to go over some of the nuances, and the reason for that is because, for those familiar with Forex, Forex is a 24-hour market, right? So the candlestick line is made with open, high, low, and close. Right? So there's really, there's some nuances because the candles in the Forex with the open, high, low, and close. And I'll go through that when we look at some of the candlestick signals. Okay, futures. How many trade futures here? Okay, it's usually about 5% or so. This is from Futures and Options World magazine. Candlestick charting offer many important advantages. And, okay, again, all time frames. And we're going to be looking at some intraday strategies today. We're going to be looking at intraday charts and just shows you using candlesticks and their own Western tools. By the way, when we discuss Western tools tomorrow, keep in mind I'm going to show you some of my favorite Western strategies based on my experience. My niche is candlestick charts since I revealed them to the West, but I've been using Western technicals since, oh my goodness, 1974. And my joke is I started when I was 2. But the point is, I have over 30 years experience with Western technicals. And I think that's kind of a unique combination, knowing the candles inside out and knowing Western technicals. And based on my experience, I have my favorite Western tools. It doesn't mean my favorite are going to be your favorite. A lot of it is kind of random which tools you wind up with. You may be working with a trader who happened to like Fibonacci retracements, and you start learning about that, so you focus on Fibonacci. But I'm going to show you my favorite tools. But whatever tools you have, and we're going to go much more in depth tomorrow, whatever Western tools you have, stay with it. And if you have a candlestick signal confirming a Western signal, you've greatly increased the likelihood of the market turning. Okay, but we'll look more at that tomorrow. And once again, just kind of recapping, reviewing the benefits of candles, accelerating your analytical abilities. You could look through lots of markets very quickly to scan visually through them to see which candlestick signals are. And I have this cartoon made up. Nobody should be allowed to go through the markets that fast. Speed is the essence of winning the information war. And candles are a very fast, very visual way of really finding out the information. Who's winning the battle between the bulls and the bears? A tall white wheel body, who's in charge? Bulls. Long black wheel body, bears. The Japanese call the real body the essence of the price movement. And as we go down the educational path in a couple of minutes, we'll talk about what happens when the real bodies get smaller and smaller. Now, the seminar is going to be broken down into 3 segments. Okay, I have what I call my trading triad success system. And I mentioned before the danger of trading with candles in isolation. Okay, write this down. Candles are a tool, they're not a trading system. Very, very important. I know many of you are excited about candlesticks, but realize it's only part of the picture. You cannot trade with candles in isolation. And this is why those who test candle signals, whether the testing comes out good or not, doesn't matter. You can't buy in every candlestick signal, you can't sell in every candlestick signal. And what you're going to be seeing over the next couple of days is when you have a couple of things. One, being able to correctly recognize the candlestick signals, and then more importantly, what to do with them or not to do with them. So that's the first leg of the trading triad, candlestick charting techniques. The second leg of the triad is Western charting techniques. The Japanese say, like cords in a rope, each is individually strong, but when interwoven and used together, the rope becomes much, much stronger. And that's what we're going to be looking at when we combine Western technicals with candles. And then the third leg, and this is probably the most common misuse of candlesticks, is trade management. The Japanese will say his potential is that of the fully drawn bow, his timing, the release of the trigger. When do you release the trigger? When don't you release the trigger? That's what trade management is. You have a candlestick signal. Do you buy, do you sell, do you stand aside? Then when you place a trade, if you place a trade, what do you do with the trade? You have to monitor the trade, and we're going to be going over that tomorrow. So I had mentioned before, I had congratulated you on investing the time in education, and I know it wasn't easy for a lot of you to get here. And the reason I wanted to mention that is because this is a wonderful proverb, deep roots are essential for a tall tree. Gertrude Stein, famous writer, said, and this is a nice quote, "The money remains the same, it's just the pockets that change in the market." It's funny, my daughter just graduated. She has a degree in creative writing, and my son's going to Ithaca now. He just started school and college. And the reason I relate that is because the education, we know college is not cheap, right? But the cost of ignorance is a lot higher than the cost of college. So I have no problems paying for it. And to me, the fastest way to the bank is education. And that's, again, the whole goal of this seminar, getting you down the educational path. And one of the common questions I'm asked a lot is, how did I get involved with candlesticks? Back in the 80s, I was working at a brokerage firm, and this was in New York. And down the hall, there was a Japanese broker, and she would deal with Japanese clients. This was before candles were known to the Western world. The only candlesticks were used in Japan. And so she would get this chart book sent to her from Japan, and I was in her office one time, and she opened up the chart book, and she said, "Oh, we have a window." I said, "What are you talking about, a window?" She said, "Oh, you Americans would call that a gap." I said, "What the hell are you looking at?" and I didn't say it quite that way. So she showed me this book, and this was called the Golden Chart Book, and it was hundreds and hundreds of pages. And every week she would have this sent to her from Japan and have all the Nikkei stocks, plus it would have all the major markets, the Dow, the FTSE, and they were all in candles. And obviously I never saw that before. And so she started to give me a little background about the candlesticks, and I said, this really looks fascinating. So I did research, and it took me years and years to really uncover the secrets of what I call, as I mentioned before, the secrets of the Orient. I found a translator. He got books from Japan. I spent big bucks translating them. And I'm still doing research. I'm still learning new things. It's ever ongoing. But to get back to when I was working at the brokerage firm, part of my job was giving trading recommendations to the brokers. So what I would do is pick up a phone line, and back then it was called the hoot and holler, again, pre-email and pre-IM. Anybody remember what a rotary phone looks like, right? Or an antenna on a roof. So years ago when Evan was younger, he asked me, and this is what made me feel real old. I used the word typewriter. He said, "What's a typewriter?" So I got my cane out and I started to walk like this. "What's a typewriter?" I said, "It's like the keyboard on your computer, only you put paper in there." Now we can relate. So the point is that part of my job is giving trade recommendations. Pick up the phone line, and this was actually at Merrill. No, this was actually before Merrill. And I'd give buy-sell recommendations. And as I was doing the research, now I didn't reveal the candles yet. I was still doing research on the candles, but before I put more time and effort and education into it, I wanted to make sure they were working well. And as I did the research, my trade recommendations became better in two ways. Not only letting the traders, the brokers, get into trades early, but helping them avoid bad trades. And that really gave me the impetus to continue spending the money, because I paid for everything myself, spending the money and investing the time and effort. Anyway, this was the P&L, and although my name is last on the list, you could see who had the highest P&L. Okay? And this was all because of candlesticks. Okay, by the way, we're going to look at the importance of this later on. See, I had more losers than winners, yet I had the highest P&L. How do you think I did that? cut the losses, stops, part of trade management. Okay, the most successful traders do this. They'll have higher number of losers than winners, but they let the profits run and cut the losses short. So let's review kind of what we learned so far. The popularity of the candlesticks. Okay, if I didn't hate puns, I would say candles are hot, but I would never say that. We went over the anatomy of the candle line, just very basic anatomy. We're going to be looking at how to harness the candle line in a couple of minutes. But essentially, a tall white real body, a long black real body. The Japanese say the real body is the essence of the price movement. Candles and market psychology. Okay. Every candlestick line tells a story. And it's up to you to know how to read the message of the candlestick line. And that's what we're going to be doing today, looking at how to read the market's message through the candlestick line, because the candles are directly made by the psychology of the market. Everybody see that? Okay, even with this basic construction, okay, this is the real power. Okay, the benefits of candles, easy to understand, early reversal, safety first. I won't go through the whole list again, but we've looked at the benefits of the candles. Now, what we're going to do, this is very, very important. Okay, that's one of the things I mentioned to write because of the importance of that. Okay, candles are a tool, not a trading system. Okay, so what we're going to be doing in this session is looking at the candles as a tool, and then we'll go to the next level on how to set up how to use the candles to buy, sell, or stand aside, and education. Okay. So our first focus is the first leg of the trading triad success system. And for those not familiar with the word triad is Latin word for three. That's where I came up with the expression. And the analogy I make, it's like a three-legged stool. If you take away one leg of the stool, what happens to the stool? Falls over, right? We need all three legs. So the first leg we're going to be looking at is the candlestick charts. And, these I just repeated some of the major benefits. So early reversal, safety first, and so forth. Okay. Now let me go over what we're going to learn in the first part of the trading triad. Okay, we're going to be looking at real bodies and shadows. Okay, analyzing real bodies and shadows, kind of an overview. We're going to first look, we're going to progress. We're going to look at single candlestick lines. We're going to look at bull single candlestick signals and bear candlestick signals. Then we're going to be looking at double candle patterns, okay, such as the engulfing patterns, the dark cloud coverage, and so forth, and the bull and bear side. We're going to be looking at triple candle patterns. You notice we're going through progression by number of candlestick signals, 1, 2, 3, and then we're going to be looking at continuation candles. And in fact, within the continuation candles is my all-time favorite candlestick signal. And I'll let you know what that is because you're going to see a big slide that says Steve's all-time favorite candlestick signal. So I'm not very subtle. We're going to start to ascend the ladder of knowledge. And by the end of the seminar, where we have the whole trading triad system, candles, Western technicals, and trade management, you're going to reach your golden key to confidence and ultimately improving profits and decreasing risk. Okay? And again, we need all three. And by knowing the trading triad success system, you're going to own the knowledge. You're going to be able to quickly read the market psychology. That's mainly through candles. Discover market terms before they become apparent to others. Information is power. Again, learn how to avoid losing trades. Okay, not only getting into trades early, but knowing which trades to avoid. And by owning the knowledge, okay, rock solid confidence. Confidence equals success. Okay? Actually, it's knowledge equals confidence equals success. I should make a little formula out of it. So what we're going to do now is start ascending the ladder. Our educational journey begins with one step. Journey of 1,000 miles, I'm sure you've heard the expression, begins with one step. So we're going to start with that one step now. And what we're going to do now is look at the framework. What we're going to do now is look at the framework. We're going to analyze real bodies and shadows. This is an important slide because for those who use candles and you know their power, you may not realize why the candles are so powerful. One, we mentioned they give you the psychology of the market. There's another aspect. The candlestick chart, like the bar chart, they both show you price. Okay? So why use a candlestick chart? The second part of this paragraph or sentence is the pivotal thing. Plus, candles reveal the force behind the move. Very, very powerful aspect. So you're getting all the advantages of a bar chart insofar as you're getting price, but you're now getting an extra dimension of analysis. You're now understanding you will understand by using the candles, you're going to be able to see the force or lack of force behind the move. Okay. So just with the real bodies, and this I'm sure makes sense, right? The longer the real body, the stronger momentum. During that session, okay, as you correctly pointed out before, you have a long white real body, the bulls are in charge, long black real body, the bears are in charge. The relative size and position of the shadows, should be plural shadows, displays the extent of the price, extent of price rejection. So we're going to be looking first at real bodies, and then we're going to look at the second component of the candlestick line, which many traders really don't place enough emphasis on, the shadows. Okay, real body and shadows, the Japanese say, like the right hand helping the left. You need to think about both. See, the problem is our eye goes to the real body because it's the thick part of the candlestick line. Especially some of you may have colored real bodies. You know, I use black and white on my screen, but a lot of the charting packages have green and red, so it's very visually attention-grabbing. So you look at the real body and forget about the shadows. But when we talk about shadows a little bit, you'll understand that extra depth of analysis you get by also thinking about the shadows. So let's look at the real bodies first. So I had mentioned before the real body, and this is from one of my Japanese books, the real body is the essence of the price movement. Bulls in charge. We don't have to go through this because you had bears in charge on the right here. Okay. Now, why should you care about this? Well, because as the real body changes height, we're getting a sense of a shift of force between the bulls and the bears. So, as the real bodies shrink, whether it's a black or white, we have small real bodies. The Japanese call these spinning tops. And don't think spinning tops, because the word has a top in there, only comes at tops. Okay, it's funny. I gave a seminar in London years ago, and somebody asked me that. Does that mean it only comes at tops? No, it's called a spinning top, and I never thought about that. It's so funny. I call it spinning top because it's like a top we played with when we were a kid. Remember we threw there? That's when we had typewriters, right? So, what we're going to do with each of the candlestick signals is we'll have the basic criteria, we'll have the potential market implication, and then we're going to have how that candlestick line is used as support or resistance. Okay. Many candlestick lines can be used or should be used as support or resistance. Remember I showed you the slide of my trade recommendations, had more losses than wins, and I was able to have a good P&L because of stops. Candles can be used as stops, and we're going to be going through many of the signals, how we could use them as support or resistance. These spinning tops, small real bodies are not used as support or resistance. And what the spinning top shows is that the ability to move up or down, and this is one of the quotes from the books, the ability to move up or down is lacking. Okay? It's also called the lost child, which is interesting. So essentially, the small real body is showing us there's more of a tug of war between the bulls and the bears, with neither one in real control. Okay, want me to show you how the spinning top can help you save money?
Yeah.
Sure. Okay, hopefully. Okay, here we have a bar chart. And once again, most of them are going to be equity-based because most of my clients are equity, but these are going to be used in all markets, all time frames. We're going to have Forex markets. We're going to have commodity markets and so forth throughout the session. Higher closes, higher highs, and higher lows. It looks fine. Okay, now we're going to make a candlestick chart. And see the different visual information we get. Although the market's holding the highs, we're getting some smaller real bodies. And that's showing us now the market is separating from its trend. Now, I would not sell short here, but if I was long, maybe think about scaling back, maybe do an option trade to protect your position, right? covered call maybe, or depending on volatility if you want to do that. But at a minimum, we would not or should not be buying. We want tall white real bodies to show us the bulls are in charge, not small real bodies. And what this means is the market is more vulnerable to a correction. Doesn't mean it's going to go from up to down, but it's more vulnerable to a correction. Here the bulls are in charge, right, with this tall white candle. Here there's more of a balance of forces between the buyers and sellers. Not quite in equilibrium, but nonetheless those small real bodies are showing us that there's a lack of upside drive. And just knowing that could have saved at least 10%, $4 on that stock by not going long. So what's, as shown on the title of the slide here, what's one of the best ways to make money? Don't lose money. Okay, better to do nothing than make something into nothing. I have to think about that one, right? Now, as the real body continues to shrink, we have, and many of you are familiar with this because it's such a basic candle signal everybody talks about, a doji. And once again, the basic criteria, the market should be trending and the opening and closing should be the same or nearly the same. A couple of cents in stocks, a couple of pips in Forex. The market is at a point of indecision. Okay, the Japanese would say the market is at a standoff. For a rally to keep on going, you need the force of the bulls behind the market. See, rallies are different than sell-offs. For a sell-off, it can continue by itself. Just lack of demand will keep the market down, right? But to keep the market going, you need the buyers, you need bulls in there. And if you have a doji, that means that the market is at a standoff. It's at an equilibrium. Remember, the candles show us the psychology of the market. So there's an equilibrium between the buyers and the sellers. Very simple candlestick line to draw, but really very, very powerful in diagnosis. So, for example, here, market makes a new high. The trader doesn't know about the candlestick charts, doesn't know about a doji. Good new high close, let's buy it. I would certainly not be selling on this doji, but once again, knowing not to go long is very, very powerful in this instance. You know, how many of us have bought a market just because it made a new high, broke above resistance? Right? Yeah, it's a technical signal. You break above resistance. You should now have that add that extra dimension of analysis. Not only did it break resistance or support, but what kind of candlestick signal did you get? It breaks resistance with a spinning top or doji. I'd be a little reticent about being aggressively long. Nothing wrong with nibbling. Okay, the Japanese say first go slowly, then go boldly. Nothing wrong with nibbling, you know, if it breaks above resistance. But if I saw a doji or a spinning top at an above resistance area, that to me doesn't. What is that showing you about the conviction of the bulls? Are they in charge? No, it broke a technical area, but the bulls really aren't in charge. So now this could help you overcome maybe one of those problems about buying on false breakouts, right? How many of us had that, right? Gets above resistance, I buy it, and only for the market to come down, before the market comes down. So analyze the candlestick signals. Now, a trader I know told me he used to, before he used candles, he used to sleep like a baby. He used to wake up every 2 hours and cry. So he's probably one of those people who went long there. Okay, one of the misuses, and we're going to have a lot of these. I'll have a particular slide, but during the session I'll also mention a misuse, even if it's not with a slide. Okay, a doji does not mean the market will go down. Doji are very easy to pick up. And the doji just gives us probabilities. Actually, technical analysis in candles are a way of measuring the probability of the market turning. Okay? If we have a tall, vibrant, white real body, what are the odds of the market turning? Not that high, right? Kind of. Say we have a doji after a tall white candle. Where is the greater percentage of the market turning? Doji or tall white candle? Doji. Does it mean it's going to? No. But, and this is important, when you get a doji, it doesn't mean the trend has gone from up to down. It means the trend has gone from up to neutral. But the fact that it's now neutral is giving you that potential signal that the market might be in the process of changing. The candles, what's more beautifully illustrative of a market imbalance than a doji? Think about what that's telling you about the psychology of the market. And let's say, and we'll look at this when we talk about volume. What if you have a high volume doji? That means there's a lot of buyers, but what's the only thing to keep it as a doji? Sellers. All this reflected in a single candlestick line. Isn't it amazing? So we're playing probabilities. We want the odds on our side. We don't want something like this. New York Slot Exchange. We want to wait for those high probability trades. It happens to be crude. Okay, this weekly chart here. Okay, the doji over here, and keep an eye on the word weekly. Of course, I just changed it to weekly. So the aspect is you can use candles in all time frames. Most traders will use them intraday and daily. Okay, here on the Forex side, the rally, here's a doji. It's hinting that the rally is losing momentum. One of the aspects we'll be looking at tomorrow in great depth is this importance, and I made reference to it before, of candles confirming Western signals. So here's a case in point where we have a doji confirming a resistance area. Now, doesn't it make sense? We can all agree that if you have a candle signal confirming a resistance or support area, the odds are even higher than if it doesn't? That makes sense. And you're really going to get a sense of that tomorrow, but I wanted to touch on it even with this basic introduction today. The Japanese would say with a doji, again, they have such wonderful expressions, that the market is tired. And that's a really good way of thinking about it. Not that the market's going to go down, it's just that it's tired. And it's more likely to reverse after that. Now, there's lots of things with doji. We're going to be going over some more aspects of doji, for example, how to use doji resistance, but just to give you a heads up, there's a lot more beyond the scope of this seminar. You know, I could be here hours talking about doji. I have some more, a little bit more advanced educational material. But the point is with the doji, the thing that you should think about is that the market is at a potential, and I underscore the word potential, turning signal here. Now, notice that red line, horizontal line, and this is one of the nuances of using doji. And this gets back to the fact that of stops, there should always be a price that says you're wrong. This is one of the most powerful aspects of technical analysis, whether you use candles or not. It's a risk and money management approach to the market. So let's say you are potentially negative on that doji. Say it even confirms a resistance area, but let's imagine maybe it doesn't confirm resistance, but you have your own indicators. We're going to be looking at oscillators tomorrow. Say you use an oscillator. You have negative divergence between RSI and the doji, and you really like the relative strength index, and you find it works well, and you have a doji confirming the negative divergence. And if you're not familiar with what that is, I'll go through that tomorrow. And you sell short on that doji, or you do a bearish option trade on the doji. What price are you wrong? You take the high between, and this is the way you could set a stop. Okay, you take the high between the highest high of the two sessions that make the doji and the prior session. And that becomes resistance. So with that blue horizontal line, or that line I just put in there, what I'm showing on the slide, everybody agree that's the highest high of those two sessions, right? Okay. Now I'm going to extend the upper shadow of the doji. See now what becomes resistance? So if the market closes above that level, it's a breakout. So let me go back to the prior slide here. So here, that's a resistance area. And the highs between the doji and the prior candle are about the same. Okay, and for those familiar with those three candle lines, by the way, that's an evening star. For those who have my other resources, we'll go through that tomorrow. Okay, but let's look at this here. So here we have a doji's resistance, and if the market breaks above it, it's a bullish breakout. Okay, here we have a series of doji. This happens to be an apple, warning us the market is tired. We wouldn't be selling there, however. Once again, there's a lot more we're going to be going through over the next couple of days, but here we have a gap higher. And a lot of times the gap becomes support. We'll be looking at that tomorrow when we talk about windows. But the point is that we have these series of doji showing us how the market is separating from its prior trend. Okay, the market, as the Japanese would say, is tired. Anybody recognize this signal here? Bearish engulfing pattern. Yeah, again, don't worry if you don't recognize it, because the goal here is to take you from the basics on, but I know a lot of you have, as I mentioned, some of my educational resources. So here we have a doji, and even if it's a small, if the real body is so small, a couple of cents, I would view this the same as a doji. Okay, it becomes a potential resistance area. Now, any questions on the real body? Any confusion, anything before we move on? Because now we're going to get to the second part of the candlestick line. Okay, so we can see the power of the real body. As the real body gets smaller and smaller, the immediately preceding trend, even if it's 4 or 5 candles, it doesn't have to be a long-term trend, the immediately preceding trend could be running out of steam. Now, before we move on to the shadows, here we have a doji as resistance, and you can see how the market got above this resistance area here. That was above the doji. But this resistance area, this was interesting. This doji here became resistance. Any signs the market's stalling? Yeah. Small real bodies, doji. And actually, this works out pretty nicely. This is interesting because I could actually segue into shadows with this. Although we're at resistance in small real bodies, look at these shadows. What are those upper shadows showing you? What's happening at those levels? It's running out of gas. It's a great way of putting it, exactly. So, as I mentioned before, it takes the clap of 2 hands to, I said right hand helping left, same idea. It takes the clap of 2 hands to make a sound. And this is a very common misuse, okay? Not remembering or placing enough emphasis on the shadows. And let me show you something interesting, how if you just look at the real body and place your trading ideas or your analysis on the real bodies, you're really missing at least half of the picture. Okay, we saw before with these spinning tops that the prior trend is running out of steam. Now I've numbered them 1, 2, and 3. Let's add the extra insights of shadows. Okay, look at candle line 1 on your right. Isn't that a small real body? Yeah. Now, what about that shadow? What does that tell you? Yeah, bulls are coming in at low level, so there's a small real body, but when you add the shadow, it's a different picture. This is actually, as some of you may recognize, a hammer, but it doesn't matter even if it's exactly a hammer. The point is you have a lower shadow showing us that the market is rejecting the low levels. Are you with me on this? Yeah. Right. Okay, how about here, a small real body? But what about the shadow? What's happening as the market gets to the highs? Bears are coming in, right? Either the bears are coming in or the bulls are retreating. Either way, it's not good for the bulls, right? And let's think about the psychology of the market. Okay, do you think the bears are getting a little bit more confident? The bulls are getting nervous? Certainly. Okay, now over here, in the third one, this is a small real body and about equal shadows. Don't those shadows also show you the market's confused now? Okay. And we're going to look at this particular candlestick signal in line 3 in a little bit. But the point is that one should always add shadows to their analysis. And one of the great things with the candlesticks is that, and we're going to look at shadows a little bit more in a few seconds, is when you look, and whether you use candles or not, one of the great things about technicals is it really should give you an objective view of the market. Okay, we all have confirmation bias. If we're long, we tend to look at the bullish news, and what do we do with the bearish news? Not important, or just kind of, forget about it. If we're short, we may be like this. Never liked it, never will. And so what we need to do is have an objective view of the market. Sun Tzu, some of you may have heard about him, a Chinese military strategist from centuries ago, had a great comment about the wisdom of perspective. He said, during an engagement, a leader should not be in the midst of his forces, but a little distance apart. Otherwise, his outlook will be distorted, and he will misjudge the situation. So by looking on the outside, so for example, here in RIM, lower closes, lower highs, and lower lows, but what are the shadows hinting? Okay, and this is kind of hidden over here. This box is hidden in the shadow, but the lower shadow is right around here. Although the market's moving down, what are those lower shadows showing us? It's groping for a bottom, right? Looking for a bottom. And it becomes particularly important, especially if it's near the same support area. So with something like this, I'd be very careful about being fully short here. I'd be scaling back on short positions. For those that are doing option spreads, you may want to leg out one of the spreads. So the point is here, if we were short and we were not objective about the market, say, hey, I'm perfectly comfortable being short, we make lower lows, lower highs, lower closes. But the point is, with the candles, we should now stand back and say, hey, these lower shadows, or let's say we had tall white candles. It doesn't matter. The candle lines, whether it's the real bodies or shadows, are showing us that the market is rejecting lower levels. The psychology of the market is shifting now. Okay, so here, with these upper shadows, an area of supply, makes sense, right? Long upper shadow, pull back, right around the same level. A series of long lower shadows is visually showing us that the market is rejecting lower levels. Now, shadows become part of many of the candlestick signals. Okay, and we'll look at this later. So, for example, some of you may recognize this as a shooting star here and a shooting star there. Don't worry about taking notes on it now. We'll be going through it. Now, one of the candle lines I showed a couple of minutes ago, remember we had the spinning tops and then I added shadows to them, was a candlestick line with a long upper shadow and a long lower shadow. And this is an interesting candlestick line because it's called a high wave candle. And it's a small real body, which is in the middle of the trading range, once again, whether it's intraday or daily or even weekly. And the market's in the trend. And what it's showing, as expressed here in the market implication, is the market is confused. Okay, we don't use this as support or resistance, by the way. So the long upper shadow means the market rallied, and by the end of the day, what happened? Long lower shadow, sold off. What happened by the end of the session? I shouldn't say by the end of the day, because you could be using this on a 5-minute chart. Exactly. By the end of the session, it bounced. So it sells off, it rallies, it sells off. The market is totally confused. Japanese expression I came across recently said, as confused as if one head was set on fire. Okay. So the market, the Japanese would actually say with this candlestick line, it's lost its sense of direction. So the spinning top, the small real body part, all echoes that, but reinforcing a totally confused market is those long and that long upper and lower shadow. So for example, here is a doji, but adding to the outlook of confusion, the market made a new high, but not only is it a doji, but it's totally confused. Okay, so the market, you could think of this as a market that's neutral. The market, you see the prior candles, a tall white candle, and that high wave, actually a high wave doji, is showing us that the market is more likely to reverse than it would be if we had a tall white candle. Okay, this is an ETF. How many trade ETFs here? Okay. Again, you can use these in all markets. Just be careful. We're going to be looking at gaps tomorrow, and there are a lot of ETFs that are based on overseas markets, and if you have a lot of gaps, there's some candle signals you can't use. I'll mention that when we talk about, actually, I'll talk about that later today when we talk about gaps. But pretty much you could use candles and ETFs just as you could in all of the markets. So here, in the XLE, the market made a new low close for the move, but that high wave candle is showing us that it's confused. And if you're bearish, you don't want a confused market. You want a market where the bears are in control, are dominating. Okay? This is showing us that the market is confused. Misuse. Candles are complicated. Now, think about what we learned so far. Does it seem easy just by reading the candles pattern, right? The line it's not complicated. There's nothing complicated about it. And you're going to see as we go step by step that you're going to be able to quickly understand what the candlestick line is showing you about the psychology, about the dynamics between supply and demand by looking at the candlestick signal. Okay, so here, okay, what do the series of bullish shadows tell us about supply demand near 6350? That's in the in the yellow circled area. Okay, and notice a few weeks later, when the market got down there, look what happened. Okay, over here, rally. Are we surprised that happened down there? It shouldn't be, because every time the market got down here, it bounced. Strong bounce. Also closed at or near the highs of the session. Okay, time after time after time. So what this means is that we could use the candles to get an X-ray into the supply-demand situation. I got a letter years ago from a doctor, and he said, like a physician, candles are very simple. As a physician, he finds candles very simple but powerful, and he compared it to a stethoscope. Simple in design but powerful in diagnosis. And then he went on to saying how the candles have helped him diagnose the health of his stocks. And I thought it was a great analogy. Very simple but very powerful. So don't let the ease of constructing the candlestick line fool you. They're really, once you know how to use them correctly, very, very, very powerful. Does it make sense? Agree with that? Okay, and we just think about it. We've just touched on the individual candle lines. We haven't even looked at signals yet. Okay, look at this. On the diamonds, the market's moving up. And in that circled area here, the ellipse, although it's moving up, actually, look at this part here. Is it making higher highs, higher lows, higher closes? What's happening to the real bodies? This is, the Japanese have a wonderful expression. They say it's a market rising in agony. And that's a good way of putting it, because although it's moving up, you can see it's really struggling. You kind of get a visual. And once again, this will help you scan through a lot of markets very, very quickly. You can see something like this and say, okay, the market's moving up, but I'm a little nervous here. And then you have the extra confirmation with a series of doji. Now, be careful. You could have 2, 3, 5, 10 doji. It doesn't mean the market's going to fall that much further. One of the topics we'll be looking at is that candles don't give a price target. Okay, we're going to be looking at another one of the sessions over the next couple of days. The point is that the more candlestick signals you have at the area, the more likely reversal. It doesn't mean the market's going to fall further. Very important aspect. So we got a group of signals here showing us the likelihood of the market reversing. I mean, think about even basic charting strategy. Bar chart analysis. What's happening to the highs? Here. Now what's happening to the highs here? Same. The market's rolling over. So you would pick that up in the bar chart. Should you be able to see that on the candlestick chart? Yes. Once again, whatever you do on a bar chart, you don't ignore that. You add that to your candlestick analysis. So we have a market rolling over, going from higher highs to the same highs, and we have a series of doji and spinning tops, upper shadows. You don't have to be hit over the head for this. So let's go over what we've learned so far. Candles give you twice the information as a bar chart. Okay, there's a Japanese proverb that says, a pebble and a diamond are the same to a blind person. And you can see a bar chart has the same information as a candlestick chart. So why use a candle chart? Pebble, diamond. Which is the diamond? The candlestick charts, obviously. Spinning tops, as the real body gets smaller and smaller, the prior trend is running out of steam. Ultimately, we wind up with, as the real body shrinks, we wind up with a doji. The market has lost its breath. It doesn't mean the market's going to go from up to down. The trend is turned to neutral, so be circumspect about any long position. Shadows. Okay, we need the shadows as part of our candlestick analysis. Okay, so we've seen how to begin to read the market psychology, even using the basic candlestick line. Now, have we learned a lot so far? The smartest money in the world uses candlesticks, and what I'm going to be doing in the next session is showing you the same tactics and strategies I revealed to my institutional clients. So if you liked what you learned in this session, just wait to see what you learn as we progress the ladder of knowledge to reach that golden key of confidence and success.